You're welcome back. Last week, Chad's President Idriss Deby died of his injuries following clashes with rebels in the northern part of the country. But we'll turn our focus on what his passing tells us about the current security situation in the Sahel countries and what the business and security outlook is in that region. Well, to talk to us about this is Matt Kindigan, Associate Practice Lead for Sub-Saharan Africa at Front of View. Good afternoon, Matt, and thank you so much for joining us.
Good afternoon. Thank you for having me on the show today.
Yeah, so why is the death of Idriss Deby significant, and what does it tell us about the region's security landscape?
Mr. Deby's death is really quite, I would say it's a sudden and very uncomfortable reminder of the fragility of the security landscape in Chad and the broader Sahel region. So I would emphasize that Mr. Deby's death does not represent an immediate intensification of insecurity in the region, but it does suggest that the issue is pretty chronic and it's not going away, and if anything, it may be intensifying. It also raises some questions about what comes after Mr. Deby's rule in Chad. So under his leadership, he's been a relatively effective military force in countering the activity of insurgents. He's been quite a trusted partner internationally in terms of security, and he's also been in power for several decades. And so there's a lot of uncertainty around what comes after him in terms of leadership, especially if the military in Chad takes greater political control of the country over the coming months.
So which of the countries in the Sahel are most vulnerable to insecurity, and how will this affect economic growth in the region?
Unfortunately, most countries that straddle the Sahel are quite vulnerable to insecurity, but there are two distinct sort of theaters of insecurity, you could say. One is in the east around Lake Chad, where Mr. Deby was killed. That also affects the far north of Cameroon and northeast Nigeria. And in the west, Mali, Burkina Faso, and Niger are quite badly affected by quite an extensive area of insecurity. But I would say they're quite different in terms of their impact on economic growth. Insecurity in the west of the Sahel has a much bigger impact on the economic prospects of those countries, whereas in the east, especially Nigeria, Cameroon, although insecurity in the Sahelian parts of those countries is quite considerable, they really don't. These security challenges don't represent a significant risk to the economic growth outlook for these countries, and this is because the fundamental drivers of growth, so manufacturing development, commodity exports, services sector activity, are only indirectly affected by insecurity in these countries.
So does that mean that businesses should not be so worried about insecurity in the Sahel?
So that's correct. We would say, and the thing that we advise our clients, we say, although it grabs headlines, it is something to monitor and to watch out for. Most businesses should not be concerned about the effects of insecurity in the Sahel on operations, especially if their businesses are focused in major urban areas. And this is because most security challenges are focused in rural areas. And so, companies operating in the big cities are not going to be directly affected. There are a couple of industries that will be affected by insecurity. So companies in logistics and distribution, certainly travel and transport in rural areas is becoming riskier. And this also means that companies that are exposed to the agriculture industry across the region do have some increased risk as a result of insecurity in the Sahel. But as we said, by and large, most businesses across the region will not be directly affected for the foreseeable future.
All right. Thank you so much, Matt, for bringing us up to date on the economy of Chad. We appreciate it. Enjoy the rest of your day.
Thanks very much.
Well, moving on now. South Africa's health ministry says a research study in the country further evaluating Johnson & Johnson's COVID-19 vaccine in the field will resume on Wednesday after the study was paused over rare cases of blood clots in people given the vaccine. During the pause, it had been established that there's a 1 in a million chance of getting a clot after the vaccine, so regulators across the world have recommended the continued use of J&J's shot. According to the ministry, it is working with local regulators and the South African Medical Research Council to ensure there's intensified pre-vaccination assessment and post-vaccination monitoring where the J&J study resumes. Moving to Ghana now, data from the Statistical Service shows that the average price of goods and services received by domestic producers in the country for their production activities in the month of March went up by 13% year-on-year, the highest in the past 12 months. The Statistics Office attributes the increase to a rise in inflation rate in the manufacturing subsector. The mining and quarrying subsector recorded the highest year-on-year producer price inflation rate of 22.7%, followed by the manufacturing subsector with 14%. The utility subsector recorded the lowest year-on-year producer inflation rate of 0.4%. However, on a monthly basis, the manufacturing subsector recorded the highest inflation rate of 0.7%, followed by utility subsectors with 0.0%. Latest figures from the Central Bank of Kenya shows that the country's trade deficit widened by 13.49% in the first 2 months of the year, largely on increased expenditure on manufactured materials and fuel imports. The trade deficit increased to 198.64 billion shillings from 175.03 billion shillings a year ago, amid reduced disruptions in global supply chains and increased costs of shipping in fuel. The trade data shows imports were largely lifted by increased expenditure on shipping in manufactured materials and chemicals, while earnings from exports were driven by horticultural sales. Kenya has struggled to diversify its exports away from traditional tea, horticulture, and coffee, which are largely sold raw, exposing its farmers to price shocks in international commodity markets. Well, we'll go to the oil market now. Oil prices fell in early trade today on fears that surging COVID-19 cases in India would drive down fuel demand in the world's third biggest oil importer, and as investors adjusted positions ahead of a planned increase in OPEC Plus oil output from May. Brent crude futures dropped 0.6% to $65.73 a barrel, while West Texas Intermediate crude futures were down 0.5% at $61.83 a barrel after rising 1.2% on Friday. Both benchmark crudes fell about 1% last week. OPEC Plus will hold a largely technical meeting this week, with major changes to policy unlikely. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ini John Mekpa.